Ttcf has been one of my favorite stocks back in 2020. It's in an industry that is both new and easy to understand. It's undervalued compared to its rival, and its revenue has been growing significantly. However, the recent months haven't been kind to the stock. At one point, Ttcf reached a peak of $28 before getting severely corrected. Its current price point is around $16.60. Recently, the stock has dipped a bit more, and this is caused by the sudden resignation of the CFO and the CEO selling shares. We're going to tackle this issue first because it's capital in determining whether you should invest in a company. The reason why this aspect is critical is because it touches the credibility of the company and whether the data released by Ttcf are reliable. So let's look at this resignation a bit more closely and consider two different scenarios. The first one is that everything's fine. The CFO resigned due to personal reasons and that's that. The second scenario is because the CFO didn't want to sign the financial statements because he knows that there may be things that didn't smell right. When we look at the LinkedIn profile of the former CFO, we see that he has been the controller and VP for other companies before working for Ttcf, and that he has a bachelor degree in accounting. There is no indication that he is part of any professional order, but usually someone who becomes a controller and later the VP is a chartered accountant somewhere. Controllers, VP, and CFO are legally responsible and liable to what the company releases to stakeholders, in other words, us. And they may lose their credentials, certifications, and memberships to those orders permanently, which may cripple their professional careers if that ever happens. In those circumstances, those who are responsible to sign the financial statements are encouraged in their own classes, in professional guidelines, to resign to avoid getting the reputation and the reputation of the order tainted. The other element to consider is that Ttcf has an outside auditor whose role is to authenticate the company's accounts. That auditor is the accounting firm BDO. BDO is almost the fifth or the sixth largest accounting firm in the world in some regards. Personally, I don't think that this accounting firm is willing to sacrifice its reputation and its business like Arthur Andersen got wrecked apart because it lied for Enron. I don't think that's the case here. So overall, I don't think that a company's accounts are necessarily compromised. We may never know what truly happened because I highly doubt that the CFO is going to publish a book and talk about it. But I think that it's just too risky for too many parties for anyone to be really hiding issues that they know exist in the financial statements. Because keep in mind that we're not talking about a company that has operations overseas where oversight may be difficult, like what happened with Luckin Coffee, or a one-man army auditor, like it was the case for Bernie Madoff. We're talking about a company with operations in the United States, and the auditor being a major accounting firm in the United States as well, who doesn't want to lose its business in the country. Another thing that many are worried about is the sale of shares by the CEO. The CEO sold about 1.3 million shares out of a total of more than 30 million. Some media outlets said that, you know what, it doesn't matter because it's a small portion of his holdings. Regardless of the reason, I would personally watch closely if the CEO would do something similar in the month to come. If it's a one-off deal, then it's fine. It wouldn't be fine if it happens on a semi-regular or even infrequent basis. I can understand why philosophically some may say that it's okay if he sold 1.3 millions out of 30 millions, but in my mind, in absolute terms, that's a lot of money that the CEO managed to cash out from the pockets of shareholders who decided to invest in a company that hasn't necessarily returned the favor yet. We can't be sitting here and like, oh, he still has 29 million shares. Because I don't think that the real life works this way. The amount of cash should be measured in absolute terms, not in comparison of how much he can potentially cash out. Because either way, he won't be able to cash out all the shares like that without getting lots of people, including the authorities, to go after him to see what he's doing. Alright, so if we look at the company with all those aspects, I would say that the current discount is justified. But I think that even if those issues stink a little bit, I don't think that they will necessarily affect the company in any significant way. In other words, I don't think that there's any fraud going on. It may rub me the wrong way, but that is just real life. It's one thing to not like what you're looking at, but it's another to say that you can feel some kind of fraud that is occurring behind the scenes. Actually, now may be a good time to remind everyone that this is my speculation. The issue may be far more serious than we think, but with the elements that we have now, we don't have any proof that would let us think that there is any sort of fraud going on. I would wait for the next few trading days to check if the price manages to hold its ground. But now would be a good moment to start building very slowly a position in the stock. Other than the resignation of the CFO and the share sale of the CEO, Ttcf is expecting 2021 to be an excellent year in terms of revenue growth. And recently, they also began to play ads to increase their product's exposure. That's why I think that the company should be able to boost its stock price in the month to come, assuming that there's nothing serious about the recent management change. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.